now let's move overseas, because volatility across Asia and Latin America has been a mainstay of the past few months, right? We've had low oil prices, in fact, plunging oil prices, political instability, and now the prospect of higher interest rates back home. That looms over the market. So how does that all impact investing? Well, I want to bring in Joe Sitt. He's the founder of Thor Equities, a global real estate firm with investments in some of the busiest retail areas around the world. Count them: Mexico, France, London, and Asia. Joe is also a former retailer, having founded the clothing company Ashley Stewart. In your younger days, Joe, you were a retailer. You still know how retail works. Anyway, okay, so tell me, I know you're investing in a lot of real estate, but also a lot of companies as well. So are you spooked by what is going on?
I wouldn't say that I'm spooked. I think that the most important thing that any CEO or any investor today is cognizant of all the different moving parts, because at any time you can get thrown a loop or a surprise. And more, what's frustrating or concerning today is the amount of variables you've got to be conscious of.
Right.
As you just started to allude to, you've got low oil prices, and who's going to be the winners and losers at the end of that shakeout, which is countries like Russia and Brazil, Mexico, Nigeria, showing themselves as being more the losers, and then more the beneficiaries is in India,
right,
or here in the United States for consumer spending. Maybe it'll help retail make
or even in Asia with the refiners, right?
Exactly right. And when you look at oil, you look at political instability, even the news that we just heard a few seconds ago, and the threat of terrorism in our school systems in Los Angeles, interest rates, technologies. There's just so many moving parts today, and it's changing the game in terms of who's going to be the winners and losers, and you've got to wake up each day and revisit the macroeconomic perspective.
So where do you smell the opportunity, Joe? I mean, because you're always looking at opportunities, right?
Yeah, sure. There's definitely going to be winners, either winners because things are on their side, or winning opportunities because of value. So as an example, from the perspective of a country, you look at political systems. One political system that seems to be going a little better in terms of pro-business might be Argentina. You see Macri, who just took over as president, a huge shift for the country of Argentina.
Right?
Major. First time they've had a true pro-business, positive, economic development focused presidency in many
Are you
decades.
in Argentina?
No, we're not, but we are.
But are you planning a trip there?
For darn sure, for darn sure. So that's one. Two is opportunity in the middle of some of the damage that got done. You know, first you look at the REITs. From the REIT side, you see companies like, there's one West Coast company called KRC, Kilroy, and they're a company that's been hurting of lately in terms of their stock price, but they happen to be in Silicon Valley, a lot of tech-related markets doing well, but because of interest rates, markets beating it up.
Right.
Another example is...
So to you, like, that's a dislocation in value there, right? Okay.
And the same thing in terms of...
So are you looking at buying into it then?
I am already a shareholder, to be quite candid.
Okay.
But yes. And then secondly is good, strong companies that are investment businesses, companies like Blackstone or Fortress that have good management, are skilled at taking advantage of value. And you see Blackstone stock, I didn't see this morning, but it hit a low of 27 from 45 somewhere in the summertime.
Right, yeah, that's right. I mean, and Steve, like, why, right? Why would it hit this low when they've got so many of these marquee properties,
They've got marquee properties. They're raising boatloads of capital. They've got John Gray, who's, call it the quasi-CEO, I call him, partnering with Steve Schwarzman. And companies like that, I think, are going to be able to take advantage of opportunities, but yet the market tends to throw out the baby with the bathwater. And so that's creating, I think, as well, opportunities for folks that are cognizant of it and cognizant of the ability to take advantage of market dislocation.
But Joe, do you pay much attention to the Fed raising interest rates? Is that going to make a difference to you? Is that a game changer for you?
I think that you really hit it on the head, at least circling back to our real estate perspective. It's probably the most talked about thing, bar none, in the real estate industry.
Yeah.
But it's been that way now for about at least a decade. And if you actually study history, and I'm always a student of history and try to apply it to our investment thesis at Thor, and I'm always trying to alleviate investors' concerns through showing them the stats. And if you look over time, traditionally interest rates over long periods of time have been effectively low. It's only probably from about 1970, probably for about 37 years from there, rare that you really had that period of high interest rates. If you went back from 1870 and look at all the way forward, or
rates were pretty low.
Yeah, or you look at 1924 to 1958, you had a long period of low interest rates. And interest rates, at the end of the day, are a factor of inflation, and inflation is a factor of demand. And right now, so far, we've seen so many years of lack of demand, either because just tough business or because technology has created such efficiencies in the marketplace that it's driven down the cost of things.
So your conversation to investors is, relax. We're going to see interest rates rise, but they're not going to be at these high levels that we may have seen in the most recent past then, right?
And or just because the Fed increases interest rates by small amounts doesn't mean that the whole market then is going to shift to then having a ripple effect of higher cap rates on real estate. Why? Which we can talk about in a later segment, because there's a flight to quality, and people are understanding of late the value of good quality real estate and applying a value to that beyond interest rates.
Right, what's a value? Okay, Joe, just hang on. We're going to be back with you to talk more